Tesla announced a stock split on August 11th, and since that date, its shares have increased by 81%, while in contrast, the Nasdaq increased by 5%. Unlike the traditional approach saying stock splits are mere cosmetic changes, behavioral research documented that stock splits tend to feature real subsequent effects. This drastically shows the importance of understanding the psychological factors in the financial markets. In the flood of fintech startups showing off their amazing technologies, there's one startup that cleverly incorporated behavioral finance in their business. Welcome to GBA Finance Presents Rising Startups. We present to you Andis Wealth Technologies. Helen Yan, the founder and CEO, who has been in fintech for more than 20 years, founded the company in 2018, inspired by adaptive markets theory, which combines efficient market hypothesis with behavioral finance. The company envisions to use innovative technologies to help financial advisors and everyday investors. We're now joined by Jinsu and his colleagues from Andis Wealth Technologies. Jinsu, thank you for joining us. Could you tell us about the services you offer in Andis Wealth Technologies?
Okay, then I'm going to briefly tell you about our product and how can you distribute them. So we sell our products direct to business with our subscription model. And normally financial advisors in the financial institutions or something like fintech company subscribe our product. Actually, we have 5 main product lines, but I'm going to focus on 2 of them: risk visualization and client profiling. Because these 2 product lines are where behavioral finances are applied. And now you can see the pictures on the slide. The first picture is our real-time risk monitor. This makes financial advisors visualize and communicate risk for their clients more easily. And next picture shows that we help clients understand their own emotions and behavioral biases so they can be more open to perspectives. And also we offer a service using investment persona.
Thank you, Jinsu. Now behavioral finance expert Wonseok will let you know which behavioral biases are applied in the services.
Andis Wealth Technology taps into 4 behavior biases in its investment tools. First, they have a visualization technique. Investors are more likely to believe in what they can see than what they can hear from financial advisors. Second behavior bias they're dealing with is overconfidence. They show both upside and downside returns on a single bar graph so that investors and clients are easily able to know what the worst possible outcome will be when they lose the market. People overlook downside risk and overestimate chances of good events. Titanic is just like overconfidence, which hit the iceberg and sank in just a few hours in early 20th century. Another behavior bias they're dealing with is loss aversion. The investment tool advises clients not to sell their assets prematurely with very small margins, which is a quite famous behavior pattern in investing worlds. Final behavior bias they are trying to fix is herding bias. People are easily make decisions by simply following what others do without rational decision-making processes. Andis Wealth steps in and says, hold on, don't run far to that end.
Thank you for the elaborate explanation about the behavioral biases. Now, Minwoo will talk about the future of the company.
To sum up, Andis Wealth is a company that provides service to fund managers who are willing to persuade their clients not to fall into the psychological bias. This company has shown rapid growth within just a few years, but the question is, will they be able to do that in the future? Well, there's an obstacle, which is called the robot advising companies. This is really simple, just to replace human fund managers with the AI so that they could achieve 3 things, which is lower fees, lower human errors, and lower barriers. AIM, one of the largest robot advising company in Korea, has achieved 300,000 users within just 2 years. And also, Contact, another robo-advising company in Korea, has improved their accessibility by using kiosk and mobile apps. This means loss of fund managers and also loss of time for the Andis Wealth.
Losing their customer could be worst case scenario for a company. Question is it plausible?
According to the Robert Shiller, a Nobel Prize-winning economist, we still need human insight on stock markets since stock market data is not big enough for the AI to analyze with. For example, within these few years, the AI fund has been underperforming since they have never faced a president who's tweeting crazily on the Twitter.
Hey investors, this is Yuhyon Kim here. If you want to learn more about the financial markets, please don't forget to subscribe our channel.